All right. What's up? I did take a couple trades this morning. I tried scalping ADIL in this area, but kept getting chopped around. I did end up opening up a little bit, but I missed it. SPY, I did take a short on this. Usually I don't trade SPY, but the setup was just so obvious. I was just looking at the SPY. It happened to be at the time of 8:30, and on this huge red candle, I saw it down here at 5:15. I was like, okay, this is just way too obvious. I need to take this, and I just went short 100 shares at 5:15, and then kind of just covered into this next candle for 50 cents or something like that, and 100 shares, so up 52. I could have kept holding short, but I don't know. I don't trade SPY, and this thing, sometimes can really is rough. But it was just kind of an anomaly trade, just because it was so obvious, and I just happened to be looking at it. I could have held the short. I would be up like $300 or so right now. But it is what it is. I'm so used to scalping. It's like, for me, holding a stock is just like very, I'm going to have to like work my way up to that. But yeah, so the market is down because inflation is ticking up again. Ticking up. Market is starting to realize that those rate cuts are probably not coming anytime soon, because inflation is already coming back up and they haven't even started cutting the rates. That's a red flag. So if they decide to cut the rates like they were saying, inflation is coming right back, probably even stronger. So yeah, and if they decide to go back on the word, Jerome Powell was already saying for like the past year, oh yeah, we're gonna cut rates, we're gonna cut rates. So the market priced in rate cuts, and now if he starts going back on his word, we're gonna get a pendulum swing back to the other side, likely. So we'll see. But the Fed is kind of stuck in between a rock and a hard place. Do one decision, it's going to turn out one way. And if they do it the other decision, it's going to turn out a different way. So if they hike rates because inflation is still ticking higher, market's likely going to react severely negatively with that news. And if the Fed starts to cut rates like they were saying to stimulate the economy again, and lower interest rates, inflation's going to come back because it's already ticking back. So they didn't get aggressive enough in 2020, 2022 or 2023, and now inflation has not gone back to the 2% target that they want. So there's no way really out of this for them. The only way is to either live with inflation for another few years, and inflation is going to come back until we finally realize that we need to actually raise rates higher, or they're going to just bite the bullet, raise rates, and hopefully the market doesn't crash too much. I think they should take that approach, but the government is not exactly makes the best decisions. So we'll see what happens, especially with the election coming up. I doubt that they're going to start raising rates again before the election in case the market, because the chance that the market does crash, it's not going to be good for the current president. So I'm not sure, if they have an agenda, which they probably do. So their agenda might not be to raise rates. They want to probably keep the stock market ripping higher at the cost of inflation. So, but I think eventually it's going to happen. It has to happen eventually. It has to happen. Don't think there's any other way. It's too late. It doesn't matter what president it is. The national debt's too much, and to continue the charade, you need to print more money exponentially to offset the interest payment, and that's going to generate more devaluation of the dollar and more inflation. And so the president doesn't matter. We're in too deep. We're in too deep. A president isn't going to fix this. Trump isn't going to fix this. No one's going to fix this. This is like years and years of printing, finally coming to an end of, well, if we continue to print, people are just going to have to live with 10% inflation to make sure the stock market and economy doesn't crash, or you raise rates to correct the issue, but likely the market's going to crash. So pick one of the two. Anyways, let's get into the small cap market. And also I saw gold was ripping. Gold is up, so that's a sign that who's buying gold. Who's buying gold? Who's putting all this money into gold to make this type of move? There's got to be some big players that are moving their money to conservative assets that are going to hold on to their purchasing power because they know what's coming. They know what's coming. The market is starting to realize what's coming. So they want to preserve their purchasing power for the next credit event. And when the market does crash, then they can start implementing stimulative programs or stimulative policy to recover the market. But all throughout history, since the beginning of time, every single currency that was not pegged to, like gold or anything like that, every single currency, fiat currency, has been devalued to an exponent, or not exponential, it's the inverse of exponential. I forget what it's called. Where it gets closer and closer and closer to zero without ever touching zero. So it gets more and more to zero without ever touching the zero, and that's just in the history of every single fiat currency ever created, has always been devalued and devalued and devalued and devalued to eventual closer and closer and closer to zero until eventually it's just useless. Where there's countries in the world that it's more valuable to use the bills to create like origamis and sell those origamis than it is the actual bill. I forget which country it is. Let me look it up. I think it might be, it might be Argentina. I know they have pretty bad inflation. Currency origamis, let's see. Currency origamis, which country maybe? Let's see here. Yeah, so eventually, imagine, yeah, Zimbabwe, that's it. Zimbabwe experienced hyperinflation after the government overprinted money in large part to pay off massive debt. Let's see here. Or no, Venezuela too. I don't know which one. Let's see here. Let's go to images. Yeah, well, I guess I can't find it. But eventually, the currency is going to be more valuable to wipe your ass with it than it is to buy anything. So save your dollar bills, and they could be toilet paper. Maybe a couple years, 10 years from now, 20 years from now, 50 years from now, you'll have a nice stack of toilet paper to wipe your ass. So ADIL, ADIL. I like this one. So we're coming up to this resistance. I've had this level here. I've had this level here already pre-drawn. So it looks like I've traded this before. Let's take a look. Okay, so coming down here, looks like we topped out and then we broke out. Now it's resist, or now it's support, broke down below, now it's resistance. Okay. So ADIL, I know there's news on this. ADIL Pharmaceuticals now it's peer-reviewed publication, highlight promising safety data and high patient compliance in a clinical trial as a potential treatment for alcohol use disorder. So alcohol use disorder, that's pretty common. So that could definitely cause a move. Publication, high compliance, okay. Let's take a look here at the float. Dilution tracker. ADIL. Take a look at the float here, 3.9 million share float. Warrants at 282. That was from October 2023. I wonder how many are left. Since it's already went over 282 since October, not sure if they've already been executed. Oh, there's March 2024 warrants. Oh no, those aren't registered. Those aren't registered. So they have definitely a potential for dilution. So, something to keep in mind. Doesn't mean we won't trade it, but it's always something to keep in the back of your head. MRIN is the next one on the gap scan. MRIN, this one made a crazy move back in COVID. I remember this. Way back here, yeah. 2021, man. Holy crap. From $1 to $27. That is insanity. That's absolute insanity. I remember this stock. I remember trading it. But I was not experienced enough. I was a beginner trader. I was a noob. I was probably red on this move. I was probably red. Let's see if I even shows my trades. I remember trading this. It does. Yeah, let's see how much I made. So on the first breakout, I made 2.5 cents on 185 shares. I made $5 or something like that. I made $5 on a breakout from $1 all the way up to $4.60. On day 2, I made 5 cents on, let me do the math here. I think it was only $75, I think. 1,611 shares traded on this entire move from $5 up to 26. I made 5 cents, 0.05. So I made $80. So in total, I made $85 on a stock that went from $1 up to 27. That's just some beginner trading stuff. Beginner trading, for sure. I had no idea what I was doing. No idea what I was doing. And the share size is probably super small. Let's see if I can't even, it's not even going to load here. Let's see if I can kind of snapshot with my eyes. I think maybe 100 shares, 10 shares. I think I was only trading 10 shares. That's just, my goodness gracious. Wow. Yeah, those were the days that huge moves, and I couldn't capitalize because I wasn't experienced enough. Meanwhile, I was watching Ross Cameron at that time, like watching his daily live pre-market live streams. Dude was pulling out like 50 grand, 100 grand a day on stocks like that. And I'm sitting there like, holy crap. Like, first of all, how is that possible? Second of all, I'm like, I can do that? Like, that's a possibility? And